What is up, guys? It's CJ here, and today we are going to go over a staple model within SWT, Solari-Wyckoff theory, the SW1-R accumulation. R standing for reaccumulation. In Wyckoff terms, this is a reaccumulation model. So we'll see reaccumulations and redistributions. Within SWT, we'll be calling those SW1, or if this was a model 2, SW2Rs. So this is a different type of schematic than you may be used to, but it functions exactly the same way as any other Wyckoff schematic. It is just from where you are starting your range pull from is the main thing. So let's get into this model. Here you're seeing the finished product on a model that just played out on Bitcoin. And we're going to clear all of this and we're going to break it down. So if we get rid of this, we can see that this is the price action. We have recently completed, we'll hide this. We have recently completed a more so higher time frame swing short trade. Put this back to right here in time. So it's a little bit trickier here on Bitcoin, which is why we're going to go over it. So zooming out, always want to build the context for these plays, but this is not important for the video as much. We're just going to be going down the schematic. So here you can see a regular Wyckoff Model 1 distribution that then is going down and hitting that technical target, resetting the order flow objective. So I just wanted to show that to show the context that we are now operating in. So if we come down on our time frames here, you're going to see that we do get a market structure shift. Looks like on the 45-minute. So you had some sort of model right here that ends up breaking structure right here, confirming a rotation up to this high. So let's follow this. If we're looking at the 45, right? So 45 is looking like this. That's our current market structure on that 45 minutes. So even if you didn't like this break, you're getting a more main break right across right there. So this break structure then should confirm a rotation to this high right here, at least, right? So this breaker structure should confirm price to rotate back to this high. It doesn't always happen, right? But you can be operating with that order flow in mind. To do that, how are we going to get there? If this is a PL, a protected low, so if this is our PL right here, we had some sort of model, it wasn't that clear, but you get that 45-minute breaker structure. How else then is price going to get to this high? Well, a way that it can do it is a reaccumulation schematic. So if we're looking at this price action right here, we can see that we have a distribution at these highs right here, a Wyckoff Model 2, an SW2 right there. That end up completing the technical target right here. So when I'm now drawing this, okay, so this will be a very easy way for you guys to understand this model. So what is happening basically is you get a range. So you pull your range from low to high like this. This is your typical range right here. And then so you have a buying climax right here. You have a UTB, UT, and phase B. Really don't like that these are bordered. Just going to take these off quickly, just so it doesn't get messy. So I just want to build the whole context because it always starts right here, right? And then you get an LPSY that swept extreme liquidity right here. Everything should be familiar at this stage. So you get that model. It had a return to zone of some sort, and you had that model play out like this. So now we can be extending that range, right? And this is your AR, automatic rally backup. So this was your model right here, this distribution model. Now it can be transforming. So given that we have this order flow to come to this high right here, so we'll put that on the chart. And then obviously you have supply above, going to make this orange for Bitcoin and a dotted line. So we want to come to this high. How can we do that? Well, now we're in a situation to then look for an SW1-R or SW2-R. Given that we've already taken this low, we'd be saying SW1-R because Wyckoff Model 1, Solari Wyckoff Model 1. So we can be extending this range to this price action, and now we can be transforming our model from this distribution over looking into an accumulation, because look at this return to zone that we have. So the liquidity game has now shifted in the completion of this model. So now we are going to just move our points around. You can leave your buying climax right there, get rid of your UTB, get rid of your LPSY, and toss that AR at the top. Now, seeing this whole distribution as an automatic reaction back down to take that low, where the goal of that distribution is to create this SW1-R accumulation, this Wyckoff reaccumulation. So now let's take a look at the current price action. What do we have here? Let's go down on the lower time frames. Well, we have this demand POI that I pulled there on the 45-minute acting as extreme demand. We also have this 30-minute inverse for value gap POI that looks to have been created on the test. So now let's relabel our model. What do we have? Well, we have a PS right here. Now, I do not care about the PS or PSYs only in these reaccumulation models. I'll put them on when they're there, but I do not care about them. I really care about them in a regular schematic, but I do not care as much in these types of schematics. But what can you see here? As I say that, they are also very important if you do want to put them on. I'm just saying not as important as a main model, because I put a lot of importance on these sometimes in main models, and they can also help us with extended targets. That will not be the case in these R models, these reaccumulation, redistribution models. But what do we have here? Our PS and, sorry, mislabel, selling climax. Whoa. Mislabel, selling climax for accumulation, right? So the starting point of a regular accumulation Wyckoff range is always the selling climax, right? Because we want to be buying. So that broke structure that then created this model and then pulled back, leaving a very clean return to zone. Let's keep labeling. STB right here and spring right here. Now, I'm very big on also identifying the test if it's there. This will help your Wyckoff knowledge tremendously if you can identify where that test is. So what do we see here? Well, our market structure from that STB low, so same as a regular Wyckoff model, accumulation or distribution, it just functions the exact same way. So you get that breaker structure right here back to bullish. For me, this confirms the whole model and confirms that spring and test. So get that breaker structure back to bullish right there. For me, this model is confirmed. So, and we're looking at it right now. We'll get this liquidity curve off. We've now properly labeled our model here. We know that this is a PL, and we know our draw on liquidity, which is this high given this breaker structure right here. So that is our draw on liquidity for this model. And now, how do we, I guess let's check some volume quickly, and then we'll decide how we want to get in. So when we look at the volume, it's super nice. What can we see? So I started it from that BC high, and I'm taking a look, and I'm seeing this breaker structure being back with inside value. So you can check that off on your journal. Break back inside value. It's also breaking back above the POC, and that's more advanced, but it's something I do like to see. It's something I do like to see. So you get that breaker structure back inside. Look at this value area low. It's backing our IFVG POI, which is inside this extreme demand POI created by the test. So I remember this model vividly. I was on the road on a very, very long road trip. People in my community know about these models, so we were all over this. I think some people may have taken it or they were just watching. I took a forward test to entry on this just because I was driving and I wasn't really trading Bitcoin too much. I was trading futures a lot, but just during that New York session. And then I was hopping on the road every day. So it's really important for me as well to do this case study because this is picture perfect what we are looking for. And if you've seen my volume in Wyckoff YouTube video, you will recognize this volume schematic right here, where you have that selling climax. So your starting point of the range, dominating the range in volume. This is our base model with the volume that we like to see. So both volumes are a check for me. Not going to keep this on here, but that's why I like to show it. But you can just see this volume spike right here, dominating the range, getting a volume spike on the STB, and then not having as much volume as your STB on that spring test, and then still getting that break of structure. So very nice involvement if I was looking to play this model, and exactly how I took this forward test. Just a stop limit, just a LO right there, targeting our TP1 and then our draw on liquidity, which is right here. So let's see how price progresses. So all it is, no need to FOMO, all it is limiting this IFEG with inside, it's backed by volume, lots of confluences in that area, and there you would have gotten filled into the trade, and would have been off to the races. And right there, you would have hit your draw on liquidity, realizing if you never took any other profits besides that high, realizing 8.4 RR. So we can maybe put our text back on. So this is a great example of the SW1-R accumulation model at work. So this is a Wyckoff reaccumulation model. I'll even put, just for this visual, just so you can see that it's having everything within SWT, Solari Wyckoff theory. This is just such a great example of this SW1-R accumulation model. So I had to make a video about it. We've been watching it, we've been talking about it. And so I definitely wanted to make a video fully going over this model. And I know that there was some people even trying to short this. I'm not going to get too into it, but you can see that when you are in these types of models, that you want to confirm any shorts with market structure on the higher time frame, because there's people trying to short this, I believe, this being a whole model, or this local model right here, when you're not getting, and this is current price right here, when you're not getting a break of structure. So it's just this is the last thing. So from this LPS up, you can see that our market structure, and I'll even maybe draw so we can see how the price is moving, but you can see that you never get any break of structures and you are just trending from this accumulation like this. So you can see how price is actually moving as well. So you're getting that LPS right here. Then you're getting that LPS2 right here. That came into this structure demand right here, created by that LPS. You don't know exactly where the LPS is going to create demand. Sometimes it's like not creating, and it will create something up here that then becomes the LPS demand, which then creates the LPS2. Remember, always using range supply. So this whole area is demand like this. Yes, you had the more refined block at the bottom, but it gets front run with inducement. And then you put in that LPS3. You put in that LPS3 right there. into this range demand instead. It's actually structure demand with that inefficiency as well. So you don't come right for that most refined, get this market structure drawing off the chart. But this is how you end up with your model. So it's an extremely clean total look at the SWT system and one of the models that lives in that ecosystem called the SW1-R. And if you're not familiar with SWT at this point, it's Solari-Wyckoff theory, and it will be my proprietary trading system that I will be releasing in the future. So this is a sneak peek at our reaccumulation model, our Wyckoff reaccumulation model, the SW1-R in this case. But all right, guys, if you enjoyed the video, leave a like, and I will see you guys in the next one.